Hello everyone, welcome to yet another session on goods and service tax filings. So today we are going to see how to offset the tax liabilities against the cash ledger and the credit ledger. So in this session we are going to see what is cash ledger and credit ledger under GST and how the balances appearing in cash ledger and credit ledger are utilized to pay off the output tax liability during the reporting period. So before we proceed with today's session, let us quickly see what we did in our previous session. So in our previous session, we learned about the input tax credit and how input tax credit is claimed in GSTR 3B. What are the different conditions for claiming input tax credit, like possession of tax invoice, then goods and service tax must have been received and the taxes have been paid to the government and GSTR 3B return has been filed against such payment of taxes. Then we learned about the block credits and where to reverse the input tax credits that are not eligible or that are blocked under the GST rules in GSTR 3B return. So let us proceed with today's session. Today we are going to see the importance of correctly offsetting the tax liability. Then what are the GST ledgers, that is cash ledger and credit ledger. Then we will see for what purposes input tax credit ledgers can be used and for what purposes cash ledgers can be specifically used. Then what are the offsetting rules. Also we will see the step-by-step process of setting off the output tax liability and we'll have a live example to understand the entire scenario of offsetting the output liability against cash ledger and credit ledger. So let us proceed with today's session. What are the GST ledgers? So there are three electronic ledgers that are maintained on the GST portal. First one is electronic liability ledger, then electronic credit ledger, and finally the electronic cash ledger. So the electronic liability ledger reflects the outstanding tax liabilities of the taxpayer. So at the time of filing of GSTR 3B return, the moment the output tax liability is ascertained, the liability ledger gets debited and the output tax liability that has to be paid will appear in the balance column of the liability ledger. Once the output liability is discharged using the cash ledger or credit ledger, then the same will be credited in the electronic liability ledger and finally the balance will reduce to nil, or if any balance remains, it will appear in the balance column of the electronic liability ledger. Then electronic credit ledger. So the electronic credit ledger gets credited the moment we claim the input tax credit in our GSTR 3B return, and once we utilize the input tax credit to pay off our output tax liability, the electronic credit ledger gets debited and the remaining balance appears in the running balance column. Then electronic cash ledger. Any cash deposited by the taxpayer will appear in the cash ledger and this cash ledger can be used to pay off the tax, interest, late fee and penalty. An important thing to note down here is that if there are some TDS that has been deducted by the deductor and we have accepted such TDS during the reporting period, then the balance of such TDS will appear in the cash ledger upon the acceptance of such deduction by the taxpayer. So let us see how these ledgers appear in the GST portal. So after logging into the account, we have to go to the services tab. Under this, we have to go to the ledgers. Here, this is the electronic liability register or the electronic liability ledger. Let us see this. There are two parts. Part 1, return related liabilities, and part 2, other than return related liabilities. So let us see the return related liabilities. So we have to select the period, financial year 25-26. Let us select April till 25-26 and let us select the period May and go. Here we have filed GSTR 3B return on the 20th of the June for the month of May. So this ledger will gets debited, and this is the central tax amount, this is the state tax amount, this is the total tax amount that is required to be paid, that is 2,17,262. So this is the amount debited or credited, and here is the balance amount. So once our output liability is ascertained, it will appear in the balance tab column. Then on the same date, we have used cash for payment of the tax, that is 27,000 towards central tax and 86,000 towards state tax. So after utilizing cash, our remaining liability was 1,03,688. Then for the balance liability, we have used credit. Here you can see credit. So we have used the credit of 81,521 against central tax and 22,167 against state tax. Total liability paid through credit is rupees 1,03,688. Then again our balance liability gets down to 0. So this is the electronic liability ledger, and this is how it works. Next, let us see the electronic credit ledger. Again, we have to go to the services, ledgers, and electronic services, ledgers, and electronic credit ledger. So here electronic credit ledger, we have to again select the period. So let us select the period 1st April till, let us select the period till date, that is 28th. Go. So here is the electronic credit ledger. On 20th 4, we have filed the return for March, that is tax period March. ITC accrued through inputs. The moment we accepts the input tax credits in the 3B return, it will get credited to the credit ledger. We had a credit of 49,426 towards IGST, 29,161 and 29,161 towards central and state taxes. So once we accepted this, our total credit was 1,07,748. Then on the same date, we made the payment of our output tax liability utilizing the input tax credit. The amount was 49,426 towards IGST and 29,161 towards central and state taxes. So once we utilized this, our balance reduced to 0. Similarly, this was for May month and this one for June month, that is the period, tax period was April, filed in May, and tax period was May, filed in June. So this is how the credit ledger appears in the GST portal. And now let us see the cash ledger. Again, we have to go to services, ledgers, and electronic cash ledger. So here's the electronic cash ledger. Again, here also we have to select the period. So let us select from 1st April till date and go. Here we can see we just discussed about the TDS credit that appears in the electronic cash ledger. Here we have accepted the TDS credit and this gets credited to the cash ledger. Then this was the amount deposited. It was again credited to the cash ledger. Here's the amount debited, credited rupees 155,596, and towards the state liability we have deposited 2,05,022 rupees. Then our balance was 391,826, and the moment we utilized this cash amount for the payment of output tax liability for the month of March, it got debited to central tax and state tax, and the balance is reduced to 0. So this is how the cash ledger appears in the GST portal. So let us now have a look at the screenshot of what we just saw live on the GST portal. Electronic credit ledger. It shows the eligible input tax credits under the heads IGST, CGST, SGST and cess. It cannot be used for payment of interest, late fee and penalty. So interest, late fee and penalty must be paid in cash, and input tax credit cannot be utilized to pay these components. Then it gets updated from GSTR 2B and GSTR 3B filing. So in GSTR 3B, the data auto-populates from GSTR 2B, and on the acceptance of the data that is auto-populated from 2B, it gets credited to the credit ledger, and upon its utilization for payment of taxes, it gets debited into the credit ledger. Next, what is cash ledger? It is a wallet deposited through Challan PMT 06. It is used for payment of tax, interest, penalty and late fees. It has separate heads for each tax type like IGST, CGST, SGST and cess. Again to mention, the TDS credit that is accepted by the taxpayer gets credited to the cash ledger. Then priority rules for ITC utilization. That is how input tax credit is utilized and in what sequence the different components are to be utilized. So IGST input tax credit shall be first utilized to pay off the IGST taxes, then CGST and then towards SGST taxes. Similarly, the CGST input tax credit shall be first utilized to pay off CGST and then IGST. That is, it cannot be utilized to pay the state taxes. Similarly, the SGST input tax credit can be utilized to pay off the state taxes and IGST, and it cannot be utilized for the payment of CGST taxes. So, no cross utilization of CGST and SGST is allowed. Then the system automatically applies the utilization rules in the GSTR 3B return. Then let us understand the step-by-step process of offsetting the liability in GSTR 3B return. So on logging into our GST account, we have to navigate to the GSTR 3B return. The output liability column, that is table 3.1, gets auto-filled from the data that has been filled up in GSTR 1 return. Then input tax credit related details will gets auto-populated from GSTR 2B return. Then we have to preview and validate the data and proceed for the payment of output liability. The utilization summary screen will appear. There, the input tax credit is utilized to pay off the output liability as per the utilization rules. Then we have to offset the liability using input tax credit, and if input tax credit is not sufficient to meet the tax liabilities, then the balance amount has to be paid in cash. Such cash is to be paid via Challan and it will gets updated in the utilization summary, and then we have to finally offset the liability and proceed for filing of GSTR 3B return. So let us take an example of the offsetting. So in this example, we have liability of IGST rupees 5000, CGST 3000 and SGST rupees 3000. We have available input tax credit rupees 6000 under IGST, 1000 under CGST and 2000 under SGST. So how this credit will be utilized to pay off the liability? The IGST input tax credit of rupees 5000 will be first utilized to pay the IGST liability of rupees 5000, and the remaining 1000 IGST input tax credit shall be utilized to pay the output liability towards CGST. Then the remaining CGST liability of rupees 2000 will be paid by utilizing 1000 input tax credit of CGST, and remaining 1000 shall be paid in cash by the Challan. Similarly, the SGST liability of rupees 3000 will be paid off utilizing SGST credit of rupees 2000, and remaining 1000 shall be paid in cash. So what are the best practices for utilization of input tax credit? Monitor ITC regularly. So the taxpayer must monitor the input tax credit regularly, and all the ineligible input tax credit should be reversed in the GSTR 3B return. Then maintain cash balance buffer. So it is always advisable to file the GSTR 3B return well within the due date so as to avoid any penalties or interest. Many times it so happens that due to technical glitches, the amount paid through cash does not get reflected in the cash ledger, and due to this, on the last date the returns couldn't be filed. So it is always advisable to keep certain balance in the cash ledger. Then understand auto utilization logic. The manner of utilization must be understood by the taxpayer, and it should not be used in contravention of the allowed manner of utilization of input tax credit. And finally, reconcile books with ledger balances. The ledgers in GST must be in sync with the balances as per the books of accounts. So to conclude, offset ensures compliance. So mere having the balances in input tax credit ledger or cash ledger is not sufficient. The output tax liability is settled only once it has been offset against the credit balance or the cash balance in our ledger. So it helps in avoiding penalties and interest. Timely filing of GSTR 3B return and offsetting the liabilities ensures compliance, and it avoids the penalties and interest. Credit and cash must be managed carefully. The cash balance and credit balance must be managed properly, and it should be utilized effectively in the GSTR 3B return so that optimum utilization of both the balances are done. Then in our upcoming videos, we are going to see the creation of challan and the adjustment of late fee in our GSTR 3B return. So that's it for today's session. Thank you.